So we have to talk about Tesla stock because today we got an update on inflation, and oh my goodness, inflation actually came in hotter than what was forecast for the month of September. Now, many market participants are worried and concerned that inflation may actually spiral out of control and go up again, and they're worried that the Feds may actually hike for the month of November, but I want us to take a look at this. See, the CPI actually demonstrates that progress in lowering inflation ahead, yes, is likely to prove slower going than it has been over the past year, but the downward trend remains in place in my view. It looks like inflation still is on a good trend downwards. In fact, I want to share this snippet of what I told the Push and Profit private group for this morning. See, I said my view is that a November hike would get ruled out and result in a repricing of the markets. That is what has been happening in this bullish move up. And we'll go ahead and talk about what's been happening for today, as just a couple of things we got to talk about. But I said while probability is still rated at approximately 20+%, this was from a couple of days ago when it was at this level, I still see this coming down to zero, which will favor equities, and I believe that December will subsequently be moved down to zero as well, which will result in support for equities rallying so long as the real economy or the numbers provided remain in check. For the near term, I feel that October has upside, as I've been calling it, Uptober, and November will see more resistance and consolidation. Now, I went ahead and said a couple of other things as well, but we have to talk about what's been going on with the markets in regards to the reaction to inflation, but then also really kind of have a deeper look into Tesla and its reaction to inflation. So if we actually take a look at the QQQ, which is a NASDAQ index ETF, we see that yes, when an inflationary report came out, it did come downwards, but after the market opened, we actually started to see the overall market for the NASDAQ push upwards, but it wasn't until the middle of the day where we saw this capitulation and selling for not only QQQ, but it was pretty much almost every single stock. Now, in my view, I believe this was due to some geopolitical tensions, as today we saw a bit of saber rattling from the White House and some aggressive posturing, but there's no actual evidence of anything escalating for the US, and of course, it's just this rhetoric ramping up, which understandably would cause some jitters for the markets. And so we did see some selling pressure for not only Tesla, but the overall markets today. But if you actually map it out, it was really just a small decline of maybe 1.5% with Tesla and not anything too concerning. And so this is why my belief of October is still actually in play, because at the end of the day, it's not like if we're moving upwards, we're always going to have green days moving up. I mean, I wish that were the case, but that's absolutely not the case. But with that said, I want us to hop into my laptop and I want us to just take a deeper look into Tesla stock. We'll go ahead and break down some of the price action that we're seeing, but also talk about some of the news, some of the interesting stuff coming out for Tesla. And so I want you guys to be aware of this. Alrighty, so we are in my laptop taking a look at Tesla stock, and yeah, it is a bit scary how we saw this big sell-off. As I said earlier in this video, we did see pretty much Tesla and the overall stock market fall down a bit after the inflationary report, but we started seeing things push upwards. However, it wasn't towards the middle of the day till we saw everything fall down. I mean, if you look at it, it wasn't just Tesla and Silo. You look at Disney, which is a name that I'm only laughing because Disney is recovering a bit, but it's been something that's taken a major blow recently. But anyways, let's not talk about that. Let's look at Meta, right? Looking at a 5-minute time frame, we see that Meta sold off exactly at this moment as well. When we take a look at AMD, Microsoft, there was pretty much the entire market just at this time at 1 p.m. capitulated. Right now, again, I believe that this is tied to some geopolitical tensions, but I also want to point out to something as well. See, we actually saw the 10-year treasury at around that exact time at 1 start to trickle upwards again. And so that's a bit concerning, because we started to have some relief with the 10-year treasury, and now it's actually picking back up. And so that is definitely another component to why we saw some selling pressure for the overall markets. But one of the things I want to point out is that, yeah, the inflation that we saw today in this inflationary gauge from the CPI did come a little hotter than expected, but it doesn't really signal to me that we need to get another hike. In fact, if we actually look at what the future markets are pricing in, they're still pricing in at this moment an 11.8% chance that the Feds are going to need to hike or are going to hike in the next November 1st meeting. In fact, we saw this changed quite a bit, right? Just a few days ago, we saw this at 20%, so it was a bit higher. Yesterday, it came down to 9%, and today it did push up to 11% simply because we have, of course, this bad inflationary report. But at the end of the day, 11% still is a low likelihood that the Feds are going to hike. And that's why I stand on my chance that the Feds are most likely going to pause in this next meeting, as we just got the meeting reports. I talked about it in yesterday's video, how we had the meeting transcript from September, and we saw that the Fed is a bit concerned of actually over tightening as well. And so that's why I believe that once November 1st comes, that could cause some repricing structure in the markets, and that could keep us a little bit bullish. Of course, I don't believe that we're gonna continue going upwards, but we'll talk about the price action for Tesla in the long term as well. But I also want to highlight some news, right? So we have Rob here from Tesla Daily mentioned here on X.com that here we go, just got production numbers for Giga Shanghai in September, and he mentions that Tesla produced 18,104 Model 3s during this month. He also mentions that Highland was announced on September 1st, so it would seem likely that these are all updated Model 3s, and Tesla's already hitting 4,200 per week. Looks like an incredibly smooth transition, he says, at Giga Shanghai, and then he goes on to say that the Model 3 averaged around 25,000 per month at Giga Shanghai year to date before the update, and he also goes ahead and says that the Model Y production dipped a little bit in September to 47,989 from 59,502 in August, perhaps some labor shifting to assist with Model 3. So a bit interesting, but honestly not too bad. With this transition into the new updated Model 3s, I honestly, in my model, had like a worse idea for what could have happened. So this is honestly not too bad. And this is probably something interesting that we're going to want to pay attention to as far as further developments in the earnings that we're going to receive in just a few days. Now, we also have Sawyer Merritt here point out that Ford recently said that they have reached their limit of economic proposals, and that the Kentucky truck plant that was recently striked could push fragile supply chains towards collapse, right? And so we're having still some major trouble from these legacy automakers, which again, I don't want to see workers lose their jobs, and I necessarily don't want to see companies collapse. That's not the whole point of capitalism, right? It's really just about competing, but not to squash competitors either. But what it looks like is that these legacy automakers are still in hot water, and things could actually get a lot worse, which means that long term, when you're looking at the long picture for Tesla, things could definitely keep Tesla way above in the lead as far as the space with EV vehicles. And so this is definitely a development that we're going to continue following, as there's multiple developments, right? We're keeping up with inflation. We're keeping up with these labor strikes. We're keeping up at geopolitical tensions. I mean, that's the thing. When you're looking at the markets, it's not just about the charts. It's not just about the fundamentals. You have to be aware of everything that's going on. And so we're definitely keeping a tab on what's taking place. Now, I also want to highlight this over here, again, by Sawyer Merritt, a great source to follow if you're on X.com. He mentions that Tesla just recently said that will offer a pay raise to workers at Giga Berlin. Now, this is kind of ironic because Tesla isn't unionized, meaning they actually don't have to do this. We're seeing these auto legacy companies kind of battle for their lives against these unions to offer better incentives and conditions for their workers, while Tesla, without the obligation, is just pretty much offering better pay. And he goes on to say that Tesla said it will inform staff in November of the level of the pay raise. Hopefully it's a decent amount for the individuals doing a great job over there, adding that it raised wages by 6% last year. So again, it's not like Tesla is this evil corporation that's just not paying its employees a decent, fair wage and is just trying to squeeze as much. No, Tesla's doing well simply because it's a great company. That's the whole idea when you're looking into these companies. Now, let's go ahead and look at this over here, right? So we also got an update here that Tesla launched a cheaper lease pricing for U.S. vehicles like the Model 3 and Model Y with its 36-month term for its lease. So if you do a down payment of $4,500 and you're below that threshold of 10,000 miles, your monthly payment is $399, which is relatively very low. Now, I want to be honest here. I am not an individual who has ever leased a vehicle. I personally don't ever plan to lease vehicles. I understand that for some business owners, it makes sense to go ahead and lease a vehicle and write it off. I completely get that. Not something that I would ever do, but this is pretty good. This is definitely great news for Tesla. And we're gonna want to continue to see how. I mean, let's actually look into in the future about 1 year from now. I bet you that we're gonna just have better competitive prices with Tesla as we just continue going, because one thing that we have to understand is that Tesla is producing much more EV vehicles than its competition. And one of the things that Kathy Wood pointed out a while ago is this thing called Wright's Law, where when you double in production, you tend to actually increase efficiency, and that actually could help Tesla reduce its cost and actually be able to have this large pricing power of being able to have this large profit margin. Now, we also talked about in the past about how FSD is really the big booster for profit margins for Tesla, but we'll keep updated on all that. As we know, in just a few days, we get the earnings for Tesla. Now, in a few moments, I'm going to go ahead and transition into looking at the charts for Tesla and having a technical perspective. But one thing I want us to keep in mind is that as much as you can do looking at the economic standpoint and also looking at things from a technical perspective, I always say that fundamentals have a bigger shape in being able to, or a bigger force in being able to shape the direction for the stock market or for a particular stock, because that's what investors put capital into a company for, right? It's because they want to see a return on their investments. And so we're going to want to see how things are faring for Q3, but most importantly, the forward guidance. As I always say, there's a lot of nuance into these earnings, and we're going to want to hear what Elon Musk says. Now, I believe it is most likely going to be Elon Musk pretty much during the larger duration of the call, as we know that recently, or a couple months ago, we had the CFO, Kirkhorn, resign from Tesla. And so I know Elon Musk in the past has said that he's not going to be speaking in these earnings calls unless it's something important, but I believe we're definitely going to hear what he has to say. And we're going to want to know what the outlook is going forward, especially with the Cybertrucks, especially with the Optimus humanoids. I know last time we were pretty disappointed with hearing, I think it was like 3 or maybe 5 robots were produced, and that it's actually hard to build them. So we'll definitely want an update on that. I actually did a poll on my community post asking you guys, what do you guys think about Tesla and its forward guidance? Do you think we're going to have a positive outlook, or do you guys think that we're going to have some more negative stuff coming out of Tesla? So you guys could still actually participate on that poll. It's on my channel in the community post before the 18th. Obviously, you don't want to make your vote after earnings comes out, because that would be cheating, right? So we got 1, 2, 3, 4, 5, just 5 days before the earnings for Tesla. Of course, I'll keep you guys updated on what's going on with Tesla, but let's go ahead and look into things from a technical standpoint. Now, yeah, we did see that Tesla is pushing up and kind of is again getting rejected by this descending trend line. Definitely a force that we're going to want to continue watching, but I don't necessarily believe things are all downhill from here. Of course, this is just what I'm saying for now, because in the next 5 days, things can change with the fundamentals. From a technical standpoint, I just don't see Tesla actually coming down any further from here. We'll definitely keep updated. I could be completely wrong, and that's why, as a trader or a market participant, right, an investor, whatever is your approach, you have to mitigate your risk. You shouldn't follow what I say, what Kathy Wood says, or what Gary Black, any fund manager, any other YouTuber, because everyone's playing a different game. I've talked about it in previous videos, how you'll see Kathy Wood be very bullish on Tesla, yet she'll carve out, $25 million of shares in Tesla. And I said in the past that this is because, of course, she can't have too much exposure into her fund. There's certain limitations and thresholds that these fund managers can have, and so they're playing by a different game. Also, me, I don't mind if I'm wrong on Tesla, and I could be wrong and Tesla could fall down. I honestly don't mind, because that just gives me another opportunity to go ahead and buy into Tesla and average it for my long-term portfolio. As I always say, I've been invested in Tesla since 2017. Not necessarily any of the, like a genius who's been investing in Tesla from way back from 2012, but I can say, I was an early investor for Tesla in the sense that I did get it around over here. And this is before Tesla was even profitable. Just thinking about the idea of the shift for EV vehicles, and we're seeing that come into fruition, where we're seeing the trend of EVs actually just continue to grow. I actually tweeted about this or reposted this on my profile on X.com, just showing that the trend is continuing, and this is great for Tesla. Yeah, from an economic standpoint, things are not good, and that's really what's holding down Tesla. But once this economy shifts, right? Once we, and of course, everything's cyclical, right? It's not like we stay forever down. It's not like we stay forever up. There's definitely different times in the markets, and I'm sure everyone is aware of that. As we know, yeah, we had this crazy sell-off in the pandemic. It looks almost small in comparison to what we saw in 2022, and just, I mean, again, there's definitely different cycles, and right now, we're still pushing up, even though we're not in the best of cycles. I believe that things going into 2024 are going to be a bit more challenging. I think that's when the true pain comes in for not only Tesla stock, but just a lot of other stocks, as we're going to have a huge amount of pain for the economy. But going into the later half for 2024, that is where I'm putting my optimistic bets for the overall market. I think that's when I'm going to want to go in a lot harder with dollar cost averaging to a lot of the ETFs I buy into. For example, I always say I'm a boring investor. I do hold stocks like Tesla, but most of my portfolio long term is basic stuff. I have QQQM, which is basically the Nasdaq but with lower management fees, and I invest in the S&P 500. Very boring. A few actively managed ETFs, but with a few other also individual stocks like Tesla. But yeah, as we go into 2024, the later half, that's when I'm actually going to be pulling in the trigger and putting more in, because that's when and again, this is just my thoughts, and things can be changing. You guys let me know in the comment section below, what are your thoughts if you're a long-term investor, but also for the traders, because I also do trade Tesla in the short term in my short-term trading account. And like I said, I still see some strength for the month of October, and I think that Tesla can honestly test over to this 275 level right over here before actually possibly getting rejected. But again, that's all going to lay down to what we see from the earnings and the forward guidance. But again, you guys let me know in the comment section below, what are your thoughts? And with that said, before you guys go, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.